Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. It's happening again, at least according to the financial media out there. The S&P 500 is up 20% from the low back in October, and that means we're back in bull market territory. Sort of. The S&P is still down more than 10% from the all-time high all the way back in January of 2022. You're probably trying to figure out what to do right now. Are we going on a bull run? Is this going to be a full bull market? Are all-time highs just around the corner? I'm Jason Hall. This is The Smattering. We're going to talk a little bit more about what investors should be doing right now. Again, let's talk about where we are. The market's up 20% from the lows, but we're still down from the all-time highs. What else is going on in the world? Inflation, still some of the highest levels we've seen in decades. Interest rates are the highest levels in 15 years as the Fed continues to try to fight inflation. There's word that Europe might already be in a recession. Unemployment is at record lows in the US. Now, that sounds good, and it is good. It's great for everybody that's trying to work. The reality is record low unemployment is almost always a precursor to a recession. And we always climb a wall of worry. That's the thing. The market always climbs up with things to be worried about. We know that. What do we do, though? I'm going to share a couple more charts here because I think there's some really useful information about how you can make the right decisions for yourself. Let's start with this one. This is the S&P 500 going back for decades from all-time highs. It always has come back before. That's the key. You see those little dips, but the thing is, over time, those little dips look a lot smaller the further you get away from them. Again, here was the crash, the dot-com crash. Took years to recover. Here was the global financial crisis. This little dip here, this was the pandemic. This is where we are today. Thinking about all that, what does it tell us? It tells us that stocks are still where you want to invest for the long term. The best time to invest is when the market is still down. The other time to invest that's the best time is whenever you are still years away from your financial goals and you have money to deploy. Is every stock a buy? Of course not. There's a lot of stocks near all-time highs that are trading for well above their average historical multiples. And in a high interest rate environment, stocks typically trade for below average multiples. So that means there's a lot of stocks out there that are not worth necessarily buying right now. I do have some ideas. I want to share a few with you. First of all, most people, chances are you're watching this video, you're not a full-time investor. You have a regular job. You have a family. You have other things in life. You're trying to figure out where to make the best investments when you have a little bit of spare time to do it. Go buy an S&P 500 index fund. Maybe buy a targeted index fund in an area where you think there's opportunity, like me, home builders, banking. I think those are areas where there's opportunities. The point is, you don't always have to find individual stocks to do it. But with that said, there are some stocks out there that I really, first of all, Shopify. This is a stock that is still way down from its all-time highs. There are questions about its business. They decided to go into logistics. Now they're deciding they're not going to go into logistics, and they're selling off and spinning out the logistics business that they bought like a year ago. They continue to cut costs, but this is a metric that I think can be a little bit directionally useful to thinking about Shopify. Right now, it trades for about 13 times sales, and this is going to be the asset-light business, right? So you see this big decline here when it was well below that. This is when we thought they were going to be an asset-heavy business. So again, this asset-light business trading really for valuations that we haven't seen going back to the 20 teens, right? So there's something really interesting there. If you still think Shopify can continue to grow, be a high margin, high profit business with a really sticky ecosystem, that I think it will. Another area that I think is really interesting right now is banking. I've got a couple of bank stocks I want to talk about, 3 actually. First of all, if you're looking for something that's on the lower risk side, but you still want to get really great value, trading for about 92% of book value, Bank of America, it's got a solid yield. This is typically a bank that I think is worth 1.2 to 1.4 times book value. I think now's a great time to be buying it. If you're looking for a little bit more growth, I think 2 that are really compelling to me are Live Oak Bank shares, SOFI Technologies. These are asset-light banks. They don't have a bunch of bank branches. Live Oak Bank shares is focused on lending to small businesses. Depositors tend to be just regular retail people looking for a high yield savings or CD. And then you have SOFI Technologies, got great news recently with the debt ceiling negotiations. federal student loans, borrowers are going to have to start making their payments again. Their interest rates are going to go from 0% back to those higher rates. It's a big opportunity for SoFi. That's a big part of their business. There's a lot going on that's good to like right there. If you're looking for even more ideas, just a reminder, our videos are sponsored by The Motley Fool. Look right here. You see our special link, fool.com/the smattering. You can get 10 more great stock ideas from The Motley Fool right there.